So why don't you tell me a little bit about the story that starts your book and the trading experience? And, when I read it, I was just like, I completely and utterly sympathize with what happened here and understand all of the emotions that were going through your mind.
Sure. So, I mean, just take in or keep in mind that it's 10 years ago, and it'll probably sound cooler in the book than my memory is a little weak, but I obviously remember the main details. So the way that I trade generally, and maybe we get into this later, but the general thing that I drives a lot of my trading decisions is lead lag, which is looking at a bunch of markets and then trying to determine what my market's going to do. And ideally, it's sort of like forensics where you're looking at a bunch of clues and it's all circumstantial and you never really get the true answer, but hopefully you get some clues and then that gives you some trade ideas. So the number one, I would say, relationship in foreign exchange that has been pretty reliable, because a lot of correlations come and go, but the one that's probably been the most reliable since I've been in the market, and definitely since like 05, 06, which is my more like senior time, kind of started around that, then was the relationship between dollar yen and US rates. So if rates go down, generally dollar yen should go down. That's like not a truism, but it's a thing that should generally be true most of the time. So what you want to do is find the times when there's a disconnect, and then ideally position in dollar yen. So if U.S. rates are going down, you want to be short dollar yen. But then obviously, hopefully, there's other things that are going into that. So this is May 2010, the story. And like you said, I told it in third person just because I think it sounds a bit more dramatic. Um, and there's one part where the trader in this story goes and looks at the window. And my dad was reading the story before, like he just read some of the book before I published it. And he's like, shoot, I thought the guy was going to jump out the window. I'm like, dude, it's me. I didn't jump out the window. I'm alive. But anyways, so in May of 2010, we're talking like early May, there was a period where dollar yen was bumping up against 95, the figure.
Yeah.
And it was following along with US rates. There's a chart in the book. But basically dollar yen and rates were moving together, which is the thing that you would normally expect. And then around, I guess it's actually late April, rates started going quite a bit lower. Like, say, I think rates were around 4 at that time, 10-year rates, which is like mind numbing now when you see where rates are, especially after the move this week. But so let's say rates went from 4 to 3 and 3.6 or something, like a pretty big move. And dollar yen was still pinned to the highs. And there was a bunch of tops right at 95. And so this was like the dream trade because rates were coming off massive. And dollar yen was at a round number, and I'm a big believer in round number bias. We can talk about that after if you want. And there was like a nice easy double top. And the trades that I like are like risking 50 basis points to make 150 kind of thing. Like I'm never, my time horizon is such that I'm never risking like 2% to make 6. It's just that's not what I do. So this was like the dream setup. So I had a pretty decent sized position. And it was like one of those. So part of lead lag is waiting for the thing to actually happen. It doesn't always just because I got short dollar yen, now dollar yen goes down. The disconnect can continue and it could persist sometimes for like 3 or 4 days. And those periods can be painful, even if you have your stop loss and you know what your parameters are. You can sometimes start doubting, or like say yields start going back up a little bit, even though there's still a big disconnect. You're like, I kind of, this thing maybe is over. So the more time that passes, the more you feel like maybe the idea is stale. So we're like 3 or 4 days into this now, and it had come off maybe 100 points, retested 95. I remember the high was 94, 99, because there was like a lot of talk of some huge 9500 barrier being defended at the time.
Okay.
So 94.99 was the high 2 days in a row. And so I remember like a couple of times I had a decent amount of profit because I had a big position because it was such a good setup with a pretty tight stop. I think my stop was like 95.26 or something. So I'm waiting. And then, so part of good trading. And at the time I was at a hedge fund, is just like not white knuckling all the time, right? Because you're just getting bombarded with all this information all the time. And once you have a trade on, in my opinion, you just tend to overreact to new information when most of the information we're getting is not useful. Like it's just, this fire hose of meaninglessness, or like noise versus signal, I guess. And extracting the signal, I think, is harder when you have a position on because you're biased.
Right.
So generally, I just put my trades on and I just try to let it percolate with my parameters. And I try not to really react that much to new information. So I was like, okay, I'm going to go for a run, try and be healthy and all that. And so fun fact, I had my BlackBerry in my pocket.
Showing how long ago it was.
Yeah, yeah. So I go for a run and I'm like just kind of far enough that I could still come back. And I have a couple of messages on Bloomberg, like dollar yen's 100 points lower or something. At that point, I don't. If my details deviate from the book, you'll have to forgive me. But the gist of it is close enough. So dollar yen was like down 100 or 80 or 100 points, which is a pretty decent move on nothing. So it was like, oh, that's weird. So I sit back down and nothing really justified it. Like, of course, the prior move in yields kind of justified it, but not really. So then, like, I'm just going to cut way forward because I don't want to like tell the story for 15 minutes. But that was the day of the flash crash. So at that point, I have a squawk. So what I usually did, which was an amazing sensory experience, was I had headphones on and I had the S&P squawk, which is like the dude. I don't even know if that still exists.
I don't think it exists anymore, but I do remember it. It's like a live guy describing the action in the S&P pit.
Yeah, and so like obviously things were mostly electronic there, but it was still the minis traded electronic, and there were still like the big S&Ps still traded in the pit at that time. And so you have this dude, and I had headphones on. You have this dude saying like, "It's bid at 30, bid at 30 now, giving it 30," and sort of like it sounds like Kentucky Derby horse racing style, like or like an auctioneer from from the olden days or something. But anyways. So you can tell from his tone, that was one of the benefits of the squawk, was you could tell from the guy's tone that something different was going on. Like you got a bit of a sense of the electricity, especially being at a hedge fund where you weren't really on there was 12 people on our trading floor. So it wasn't like being at Lehman Brothers or like a big investment bank where, there's like, you feel the roar.
There was a buzz in the room and there was no buzz. Yeah.
And that electricity like has information value. So that's why I used the squawk, was to kind of get that electricity thing. But then you could play. So I'm an electronic music fan, and I know you're not, but you can play electronic music at the same time over the same headphones. So I had the squawk and the EDM going at the same time, and it was always like a cool, almost like, when like they have those weird songs where there's like a news clip playing in the background or whatever. Okay. It's kind of like, anyways. So the guy starts losing his mind. And actually, if you go to, if you Google like flash crash squawk, it's on, it's unbelievable.
It's still out there because I've listened to it before, even before reading your book. And I was like laughing when I read your book and you said, Google this. And I was like, oh, I've actually been there already. It's terrific.
It's that thing gives me goosebumps even like 10 years later. It's so awesome. It's like everything that is awesome about the markets is that squawk. So the flash crash starts happening, and generally when equities are selling off, this isn't always true, but usually when equities are selling off, bonds are rallying, so yields are going down. Right. So that was good for my position. So as equities started dumping, dollar yen like slowly kind of went from like normal sort of grinding lower to like a fast market.
Yeah.
And so I think from quickly talking about this with you, I think the interesting part of the story is all the stupid things that you do as a trader. So this trade was like the dream trade, literally the dream trade. I had maximum size, and in a trade that was in a currency that in a market that was collapsing. And weirdly, so this is the thing that's very hard to explain. And one of the challenges that I think most people understand as a trader is I got like this flickering thought in my head that like, oh, it's oversold. This is too much. Like this guy is losing his mind on the squawk. Dollar yen's just dropped like 600 points. I was up like $3 million or something like that. and I got the urge to take the other side, and in actually bigger size. So like the just like a stupid. So I had this perfectly planned trade that worked perfectly, and then completely on gut instinct for no reason, I flipped the other way and double the size. And so, and things were collapsing at that time. Like the guy was freaking out. Like the normally S&Ps, I think, were trading like 2 handles wide, and he was quoting them like 70 handles wide or 50 handles wide or something. And he's like screaming. But those are often the moments where you do want to take the other side, but you want to do it in a rational and like controlled way. And
and
this
in
was
a
like,
smaller size,
yeah, and
because
in a
volatility has
reasonable
now gone through the
size,
roof, and you're trading bigger than you were before, and
right?
the volatility's gone way up, and inevitably, the story is obvious. What happens to you?
So then it worked out. It actually, I did not get what I
Eventually, you
deserved.
hung in, but you
Yeah,
had some.
I
So,
deserved to get crushed, and I didn't actually. But so what ended up happening was it went down really fast, and I went from up $3 million to flat in like a very short term time. Like I don't know, time kind of dilates in those moments,
yeah,
but like a minute or something, or 3 minutes or 18 seconds, something like that. And so I went to flat, and then that was the moment when I actually stepped away from the desk, because like I was raging I was raging against myself at that point.
right.
So that was the moment where I went away from the desk, because I knew that like, okay, dude, you're losing, like you're on tilt basically. So I walked away. I like stare out over the Long Island Sound and like got myself together, and then I was like, okay, now you made this mistake, what's the best thing to do? And like, should I cut it? And I had a minute to think of like rationally, okay, this is actually the place that I should be flipping. Like, even though I flipped way too early, I went long way too early. Now that it's down here, I straight up do logically want to be long. And I felt like I was being rational at that moment, like
Yeah.
not on tilt. So I stayed long, and then I made my plan. Okay, like I'm going to sell at 92.50 or something like that on the bounce. And then as soon as it bounced to 90, I just sold out, because I was back to $3 million, which was my prior anchor point. So the reason I put the story in the book is because like I did so many things right and so many things wrong, all in one trade, that it kind of encapsulates like everything that happens in trading. Like, and it all happened in I don't know, a couple of hours or whatever. Really, the main part of it happened in 1 hour. Um, and I think like one of the lessons that, like, I can't believe after trading for 20, this is year 26 for me trading, is that you still sometimes make the same stupid
Oh,
mistakes that
yeah. I
but
completely agree.